Otsu here. Who else would it be? This is Observations with Otsu. This is Wednesday, June 5th. A little bit of a delay for this week. Usually I do this on Mondays, sometimes even Sundays. For this week, I want to do Wednesday. I would have normally postponed these types of videos. If if I delay by like more than 24 hours, I tend to just postpone them to the next week. But I felt like the analysis for this week was well worth its weight to talk about. I think this is a very important week. I think the market is shifting. A lot of people are kind of disagreeing on whether we're reloading up or not. I am in the audience that thinks that we are headed to very higher very soon, but I also agree with the other side that thinks that we're still on an uptrend anyway. We're just in a big consolidation, continuation pattern. And that's the thing. I don't want to get into it because it's just the introduction, but we'll explain that. The title for this video is The Simplicity of Analysis. And I wanted to really mention that because there's a lot of very simple things that are in the market, and almost everybody is missing this. 99% of people are missing this. I'm not saying that to say I got some hidden alpha that you don't. That's not what I'm saying. I'm saying the markets are very simple to read right now. They're going to be even more simpler to read. It's not a word, but it doesn't matter. And we need to identify that. The last thing you need to do is get this, to get more complicated right now. So we'll look into that theme. I'm also going to go a little bit old school with the theme and how I used to do, where I'm going to cover the main theme for maybe like, a few minutes, not very long, but what I'm going to do is take each elements of that theme, the simplicity of analysis, and talk about that in each coin. So a little bit on Bitcoin, the reasons why, a little bit Ethereum, reasons why, Solana, and then kind of go forth with that. We also got some extra coins. Going to talk about Binance Coin. We're going to talk about Pups. I think Pups is a very interesting coin that most people are neglecting. It's already up 2x off the lows. Nobody's talking about it. We will. And so we'll take a look at that. And also have Apex Academy coming up. So if you're interested, I'll have a little introductory thing for this. A little bit longer of a video probably. But yeah, note that I'll have timestamps. You can go back and forth. You can 2x the speed, whatever you want to do. So anyway, that's the introduction. Let's get started. So before we get started, just a quick bit about what I have coming up. It's called Apex Academy Volume 2. And so this is going to be something that starts July 1st, and it's going to take 8 weeks. So it's going to go to the end of August. There's a lot to discuss about this, but the main thing is this is my trading system that I use myself. This is one that a lot of my followers have asked me on request, and APEX is sort of an acronym, so to speak. It stands for ARUN, Price Action, and Exponential. And so what that does is I will teach you pretty much 95% of my entire method. The other 5% is really just up to you as far as how you adapt that. So I'm really teaching you everything. And so you'll learn ARUN Mastery, which is the first thing. I'm going to teach you pretty much everything I know. Like I said, 95% of what I know about ARUN. I'm really the only person that talks about ARUN in the entire world in an advanced way. So I'm going to teach more about that. And then we'll go into how to trade price action, how to trade trend and momentum. And then we'll go into trading theories. And one of the reasons is I'm going to teach you all these things from a textbook standpoint, but a lot of times that's not good enough. A lot of people, there's a lot of courses and programs out there that do that. First of all, none of them have, I can almost guarantee you, none of them do ARUN in a very detailed way like I do. Second of all, that's always not good enough. Sometimes educational textbook only is nice, of course, but you need practical application. I will teach that. In addition to that, some people will do that, of course, but some people won't even help you create your own strategy, and I will help you do that too. And so this is going to be a very intense 8-week class. Most of this, I'd say about half of this, it's definitely all the textbook stuff will be pre-recorded, or at least recorded, the week prior to that. So it'll be available to you after the academy is over. I've had people ask me like, "Hey, Otsu, I want to join, but I can't be there for half of these 8 weeks." That's okay. These are going to be recorded, and you will get to take these home, basically. And on top of that, after the 8 weeks are over, there's going to be another 12 weeks that you can still talk to me. If you want to do it on your own, I will offer an extra 90 days of quote unquote support, light mentorship, kind of like that. If you want to ask me some questions usually through private message, or I'll have an open channel in my Discord for this. So that being said, I think this is a great program. I'm gonna leave a link in the description for a wait list. The wait list is going to start opening up. The wait list is already open. I'm trying to get some more seats to make sure I have a head count of what we're going to do. Then I'm going to start reaching out to you if you've reached out to me on the wait list to sign up for the early bird pricing and things like that. So anyway, I hope you enjoy it. I hope this is something that you'd want to enjoy. Go ahead and check it out. Let me know what you think. And yeah, so this is Apex Academy Volume 2. And so let's get into the theme of this video. So the theme of this video is going to be the simplicity of analysis. And I brought up something on my screen here. This is just something I found on Google Images. This is I don't know who this person is. I don't sponsor them. There's nothing like that. So I simply put them up on the screen here because I thought this was a good example of what I want to get into. And I think a good visual is going to help you. And so the idea of simplicity of analysis, I wanted to bring up because these patterns here are very reminiscent of patterns that I see all the time. These are patterns that you typically see when you start learning trading for the first time. This is, I'm 10 years into my trading career, so to speak. Doesn't feel like a career, but I have 10 years of experience now, like 9.5. And this is something that I learned in year one. Okay, this is something that's very elementary. This is, and so much so that I think, when people get to the next, if someone's trading and trading well and they're very serious about it and they get into like their third and fourth year trading, even fifth year trading, they start to kind of disassociate with these patterns. And I don't necessarily think that's a good thing. And I think the basis for that is, well, they find advanced ways to learn how to trade it, and I've done that myself with my own personal experience. Aaron, very advanced way that I'm addressing this. Nobody is using it the way that I'm using it, and that's something that I found, over the course of time, and so it's so much so that sometimes I'm even afraid to mention it because I don't know if people will apply it the same way that I will. Um, but that being said, like you kind of get into the zone if the next 3 to 5 years into your trading career, so to speak. Like I'm gonna find all the advanced ways, high IQ ways to do this, and then you start getting into like algorithms, which I did. Like if the there's this trajectory, right, that you want to get more and more and more serious and more serious and more serious, and then that helps you think that you need to be more complicated about this. And so for my example, I learned these kind of styles first year or two basically. I learned Aaron starting maybe at the end of year two, beginning of year three. That's something that I've literally have done for almost 7 years now. And so do maybe not seven, maybe like six or so. Anyway, point being, I learned something more advanced. I looked at more patterns with that advanced analysis. I started to make scripts out of that. Started to make algorithms out of those scripts, and that's kind of where I'm at today. That's why I sometimes I honestly don't like to plug my products and services. I do that because I've gotten interest from you all, and so I do have three scripts available. I have Apex Academy. I have Nowhere Premium. I have bots as well that I'll eventually launch, and those are all because I have these types of patterns that I've learned to replicate over time. And so, but the idea of this is if I could boil everything down according to my experience in three things, is I had a phase of simplicity, which is what I'm showing on the screen, a phase of complexity, and then another phase of simplicity where I took basically the last two phases and I combined them together. And so that's kind of what I want to mention. That's kind of how Apex also came about. Is Aaron? I'm using like advanced Aaron stuff. Very I'm not saying advanced is high IQ necessarily. I'm saying it like it took me a while to learn all the complications of the patterns. But the other ones, price action, kind of a mid tier. Not necessarily simple. There are very simple things like supply and demand. There's very complicated ones as well. But then exponential momentum, that's very simplistic. And so, the what I want to share in this video is that you cannot neglect simplicity. Okay, that is the point of this video, because the markets will give you something simple, And the one of the main reasons that you may miss out on a trade is because you are ignoring that simplicity. I actually this morning, in my free time, I'm watching clips of Wall Street, like Michael Douglas, Charlie Sheen kind of stuff, and we talk about those movies and Margin Call and Big Short and the one with Vin Diesel where he's got the hair. It's just like all those movies, right? And we look at all those. They're complicated. They have a challenge, things like that. But I honestly see those, and those are real. Many of those are real events, especially The Big Short. But um, and Wall Street, there are advanced applications to analysis, and some of your biggest hedge fund, companies and the most successful ones use complex algorithms. Most of them use complex technical analysis. They don't use fundamentals necessarily. They don't use news really at all. And so, that has its own weight, but you also don't want to neglect the simple things. And that's what I'm trying to tell you because crypto in general will give you a simple pattern to go by. And not all of these I use, but like I'm just taking like a very I don't know why this is called descending triangle. This I call this literally an ascending triangle. So it's a very simple pattern. You have you know a triangle formation. So I can look at that. Maybe I can find I should have had an example already, so I apologize. But you know, but Binance Coin is a good example here. And so I want to mention this is that you had where are we at here? You had your zone, you had your resistance zone right here. You had your order block. You had a touch of the resistance. You had a second touch of resistance. So I guess this qualifies. And then you have your triangle like so. Very simplistic. Everybody, not everybody, because I do know a few people that got Binance, but most people ignored Binance mainly. Well, one because of the news, but also like this is such an easy formation that got missed. Okay, and now we're in price discovery for Binance. And I remember, uh, I remember talking about Binance. Oh no, we're not in price discovery. I'm sorry. We're getting pretty close. No, we are. Are we? Wait, let me check. I wanted to make sure this is right. We are, or we were. Okay, so that plays into it, right? And I remember when I was doing analysis at 200, wondering if this was going to drop down, and I regret this. Honestly, this is probably one of my worst performing analysis trades because this had an easy signal to go to the upside, and now we're like three times that. See, because I remember thinking about trading this. I didn't, and I missed out on 215%, which isn't actually much compared to other coins. But that's my point, right? Like how lucky are we to be in an environment in a like an asset where 200% is not that big of a deal, okay? And so we make this more complicated. How many people have you or how many people you've known have 2x, 3x, 10x, and you lost it all, right? Because you didn't keep it simple. It 2x, 10x wasn't enough for you. Just like when I was watching the Wall Street movie, like Gordon Gekko, no money, no amount of money was enough for him. It wasn't about the money. It was about a zero sum game. It was all or nothing for him, and that's why not to spoil anything, he went to jail. Sorry, it's a 40-year-old movie, so um, but like that's the point. Like you make this more complicated than you should. Like he was the bad guy in the movie. Okay, you guys watched Fight Club. Brad Pitt was not necessarily the good guy. He was more of an antagonizing approach to his persona, right? And so you have these types of people that we like to look at in a good light, and they're not meant to be portrayed in a good light. And you can still be degen, so to speak, in a healthy way. And this is not mid curve talking here. This is a lot of people want to focus too much on the left curve and the mid curve that they don't care about the right curve, right? Because it takes, it for them it takes some sort of effort, okay? And that's why people like being degenerate. People like in real life they like to gamble, they like to do lottery tickets because it's easy. Like there's no effort to try to make $1 million in that sense instead of trying to go earn it. Okay, then there's other complexities with that, of course, but the point is you just keep this simple. Keep it simple. Like you don't have to work hard, but you do have to work. Okay, so So that's the element at play with this. So my point with the patterns, and I'll continue with the theme, is that the point with these patterns, recognize that they are here. Okay, very simplest. Like patterns will give you a simple way to look at the markets, and then you can look at the markets within the context of those patterns. And so the patterns aren't necessarily there to trade. They can be. I do that a lot with ascending triangles. That they are there to trade, uh, but they're more so there to give you context. And let me see if I can give an example. I think I was telling my premium groups about GMX earlier today. Where are we at here? Let me just look it up. Can't find all my stuff today. So we were no, that wasn't it. What was it here? We'll look at okay. So we'll look here. This is actually a premium trade that we were looking at. It's doing pretty good so far. But the point is, this gives us a context. Okay, we have this resistance zone. We have a trend line zone going up, and so this is your context. This is telling me that the demand is within inside this pressure triangle. And what this tells me is that when the markets are pushing up to the upside, that means you're having a pressure of demand. Like there's an interest of demand, so much so that it is pushing away from the downtrend. That's a good sign. When you have an aggressive move like this, it tends to go pretty well, but you also have a resistance zone. So now you're kind of stuck within this zone, right? To where you're locked between two ideas, and the context is those two ideas. That yes, the demand is pressuring us to go upside, but we also have this resistance. In most cases, this tends to push up aggressively to the upside. We'll see where that goes. That's kind of a free trade, I guess. But that's the point of the simplicity. It gives me context to look at the markets. Okay, and so that's where you're going with this. And like look, we need to be humble at the same time. Like none of you guys, and I mean this with all the most respect, none of us, including me, we're not in charge of hedge funds, so to speak, nothing like that. But we work with what we got. Okay, we work with the money that we got, the life that we have, things like that. Not to get, too emotional with this, but it's one thing like this. I've time tested a lot of these patterns. A lot of people have. That's why they're so common. And so don't make this more complicated for you than it should be. Like I'm married. I have a kid I have a kid that's disabled. And it's very hard to deal with life sometimes. And so like that's and I think most people have something similar to that, right? But the point is, why should I make a more complicated algorithm when I have life going on sometimes? And that will get into the way, right? So for me, it's not about maximizing my money. It's about maximizing the ratio of money to time. Okay? I would rather make slightly less money knowing that I save time and I save, mind power, to try to find something that's an easy to identify. And patterns are the best way to do that. And so again, you don't so my point also is you don't have to make things complicate. Like you don't have to ignore the complications, I should say. But don't ignore the simple things because they will give you this context. Now, that's pretty much the theme. Going into the video here, I'm going to discuss this in three different categories relative to Bitcoin and everything. So with Bitcoin, I'm going to talk about the consolidation patterns because there's a really big consolidation pattern, and so we will take a look at that and see what we got. For Ethereum, we're going to look at divergences. Divergences have been something really pertinent lately. It's something that's been going on. And so that's something that my followers have been talking about as well. And there's a good example of Ethereum divergence right now. So I'm going to look at that in this video. And then for Solana, I'm going to talk about fake outs because fake outs have happened on Solana very recently. It's very important. And I think those are also worth it as well. I'm going to take a look at some other coins, Binance Coin. I'm going to look at pups, things like that. But no analysis, no theme analysis for that, just for the big three. So anyway, that's the kind of theme category of this video. Let's get into the actual charts. All right, so we're going to talk about Bitcoin first. We're going to talk about the weekly time frame starting off. But for the theme of the Bitcoin analysis is going to be consolidations. And one of the biggest factors of that is that we can look here briefly on the weekly. and see that we had a pretty big trend move really from the beginning of last year all the way until basically the beginning of this year. And now we've been pretty much stuck in a range. And so I'm going to kind of delete all this just for simplicity and maybe just get rid of this as well. If it will, TradingView has okay. TradingView got it, but sometimes they are not good at about deleting alerts. But with this, you can see that pretty much ever since March, this is our first upward move since March. And so if you want to look at, from I guess yeah, from early March to now, we've only been up about 3 to 4%, which isn't very much, which is a good sign that we're in a consolidation move, right? We're waiting for this trend to move forward. And so this is why I want to talk about consolidations, because consolidations are very important. They're if you want to boil down analysis as simple as you can, there are only two ways to look at a market: a trending market or a ranging market. That's it. Okay, everything can be boiled down to either a 1 or a 0 in this sense. Trending or ranging. Okay, and so for this area, we have basically trend. We basically had a trend. Technically, it would be like this. Okay, that is our trend. This here is our range, and this here is our range. Okay, and so that's kind of how I'm looking at that. I could color that if I want to, but I don't want to. So that's the thing. Like the more taller, slimmer ones are trends. The other ones are ranges, and that's how we look at it. And consolidations are basically just ranges. And the way that we can look at that is if we have a range breakout, we can continue with the trend or start a new trend, depending on your viewpoint, right? So it's basically that's the most simplistic way to look at the markets. And this is kind of what we're looking at for the weekly. And so really that's just the theme for consolidations. I want to really preface that to say like consolidations are everywhere. Okay. And if you don't know anything about how to trade the markets, look at consolidations. For example, here's another one. So we had a trend move and then we had a range bound move, range bound move. Once you broke the trend here, you could just long this. And so you could long the break of that and then target the other side of that. And then this would be, 6.7R, 58% based off this particular move. Or if you wanted to wait until this closed, you could have done that as well. Would have got you about 48% instead, but that's still valid. Okay, these are still valid patterns that give you valid interpretations of the market and give you profitable interpretations of the market. And so that's what the consolidation is for. Now, let's go ahead and see what this consolidation looks like through the actual analysis part. All right, so taking a look at the weekly here, we see we had a pretty bearish day, or not really a super bearish day for last week, but just one in particular, that kind of just prints for a red day, really insignificant. But as far as that goes, really that sets up that range play that we were talking about right here. And so that we'll draw this more when we get to the daily time frame. But one thing I really want to mention with this, and I've talked about this for quite some time, is that we have two things going on. First of all, we have a very high order block here. This is where that deviation came from April. That's one reason why we have this consolidation in the first place. Deviations, I repeat this almost to death. Like deviations are the number one top most considered pattern that you should follow, right? And so I haven't actually put deviations on the list for today's video, but this is very important because they tend to hold their weight. They apply. In this particular case, it was a sign that we were supposed to break out of the zone. We did not, because this was an invalid break, and we need to retest that break to continue. That's why we actually have the break for so far for the rest of this week, but we haven't breached this just yet. Because we still need to play that out. A lot of people think that we're going to go to all-time high here pretty soon. I don't necessarily disagree. I just don't think it's going to be necessarily right now. It could be, and I'm not holding that to myself by any means, but this deviation needs to break completely for us to get to that zone. Now, another angle of this would be basically your mid. This is kind of your midterm look at this, but you also have this bigger structure right here that contains both of these order blocks together, and we're already above that. So that's the good news. And so this is why I think ultimately we are bullish here, is because it doesn't. This little bitty part up here is more semantics, in my opinion. I'm not going to hold to that. My argument here is we held this bigger zone. We broke about above here. This is kind of where I was interested along. It's excuse me, at 66,000. And so that's the key there. And so really we're doing pretty good with this. I think that we'll continue to run. I do think that we're going to break all-time highs here within the next 7 days. I don't think that that's not something to predict by any means, but I do think our next stop will be a trend line of this part right here. So somewhere between the 85,000 to 87,000 marker zone. So I think, all, I think your exposure level, and I'm not telling anybody what to do. My personal exposure level is pretty freaking high. It's like 90%. It was probably like 85. The highest I will go is 90%, so I could have money to buy dips, right? The highest I'll go is 90%. The lowest I'll stay on the sidelines is 10%. I'll always be 10% exposed, and I'll always be 10% sideline. That's just kind of how I operate. Helps me buy dips, helps me be exposed to understand the market better, gives me a good, combination of understanding the market psychology and actually being exposed if I need to be, and it's profitable to do so. So that's kind of where I see as far as this trend line goes. The A rune in particular has given me something very interesting, and I want people to really mention. I want people to focus on this. We had a bearish consolidation, so the bullish trend is active still. That's why the blue line's up top. We have a consolidation move to the downside, and now we have a wedge formation. Wedges is when we flat line on the bottom side and we start to make this triangular, formation, and that's a wedge. And so what typically happens is the bottom line tends to cross, not always, and so that's what I'm looking for. I'm looking for a bearish cross. If that happens, and I want to be very clear about this, we will temporarily enter a bearish trend. Now, that's kind of strange to say when we're almost approaching all-time highs. The reason that is going to be a bearish trend is because Aaron doesn't necessarily look at trends the same way that it looks at as moving averages look at trends. They look at the past highs and lows for the past 14 candles and determine which one is more significant than the other. In this particular case, the bears do win out. Now, I say that it's temporary is because typically when you get crosses from this height from a bearish standpoint, it's just typically a reloading period. It's basically a way to print that consolidation onto a trend. That's basically all it is. Now, what would that mean? It would mean that the bearish trend would cross, so that way the trend would be bearish, but we would do so while the bulls are at this 14% marker right here. Trading view it's just being crap in my opinion. Why are you putting this AL here where I can't even look at the stupid thing? So anyway, right here you can see we're about 14.29. Just look at it when I'm not pointing at it, I guess. But that means the bearish cross would happen at the 14 percentile. Now that's very low. It's very weak, and that's one of the weakest that you can have. The lowest that you can have is 0 technically, but then 7 and then 14. So it's the third weakest. 0 very very rarely happens, so it's really the second weakest that happens on the regular. And so that is a sign that the markets are going to probably flip the other way. We had one here at 0 actually, a 0 bearish cross here, and that was the bottom. That was the bottom. And so just keep that in mind. So we've had other ones here. We've had one, this was at 26%. That ended up being a lot better. That was pretty good for a 26 percentile. Here was one at 66%. And so here's another one. This was at 19%. And then you can see that basically invalidated and ran up. So we'll probably see something like this. I would not be surprised if we consolidate for another week or two. We could get that all-time high. I'm not saying that we won't, but I think we could consolidate a little bit longer before we get that parabolic run. But I do think it's coming. I do think that we will get something. I think this should be very similar to this, in my opinion, that we'll probably continue to run for a little longer. But that's very important. I actually want this to cross bearish. That way we can all reload, because I can't guarantee, but I can almost guesstimate with certainty that once this flips bearish and flips bullish again, that bullish flip is probably going to be the last one that you get for the bullish run. Probably the last one until we top. And so one reason I can think that is even based off of here from the low of 2018, we had these two here. We had 1, 2, 3, 4, 5, 6, 7 flips before we topped out. So 7, right? And that's if you include this as one cycle. I don't. I include this as one cycle. This was the start of the next one. It's kind of complex, but if you count this one, you got one, two, three, four, five, and that includes even the drop down on that one. Now, starting with this low here, you have one, two, three, and then if we get four here for the bearish side, we'll get a fifth one for the bull side, and then that doesn't include this one here as well. So you have a very similar amount of crosses here. That's why I think if this flips, I really want this to flip bearish because it has to flip bullish again to reload, and that reload time will be the time that will be no sleep season. Okay, and that will go very fast. It'll probably take over for the rest of the year, probably leading into February, probably top out maybe February. I'm just guesstimating on that. And so we'll see how that goes with that. But, with that being said, I think that's very important to follow on the Aaron. RSI is kind of just floating around, not really doing too much. I think so for the daily here, with your daily perspective on this, we had a very similar situation on the weekly. We had this bearish cross, it ended up being bullish, so this is the time to pay attention. And so we had a few things going on. I mentioned, this order block for the context that gave us the deviation, almost Adam and Eve, or really even Adam, or whatever you want to call it, pattern. Worked out really well. A lot of people are looking at this as a spring pattern. I don't disagree with it. I actually discussed that in one of my previous videos. But now we're kind of at resistance here. We need to break this zone. And so that's where I'm looking at. I'm not interested to buy right here because I've already bought below. But you don't want to buy at resistance, especially with this. Now, if we break above to this zone, this counts as what's called a Darvis box. This is something I use pretty often. And then we could target that to that 85, 86 marker. That's where that would be about 5.23R at 17%. And I think that looks really good. And so that's kind of where I'm getting that zone. But as far as as far as Bitcoin goes on the daily and weekly, I think it's looking very strong. We're only up 1%. I don't think that should be ignored. I think this is a time where pressure might be applied. Don't be shocked if we consolidate for the rest of the week and then we go parabolic next week. So anyway, that's Bitcoin. We're going to go on to Ethereum. All right, so we're on to Ethereum. I'm going to cover a theme for this, but also I want to mention all the extra coins, the Binance, everything like that. I'm going to cut those short for today because I am starting to run out on time. But we're going to keep going with this. So with Ethereum in particular, and I want to focus on the daily first. The theme for this is divergences, and I want to focus on divergences as a very simplistic tool, something that we need to look at, in my opinion, and something I think most people ignore, and I'm very shocked that people ignore them because they're so powerful. That being said, they do need some explanation. So one thing I want to say here is we did have a divergence up here, and that is, I'm not saying that's the reason for the drop down, but that's also one reason why I tend to sell at divergences. That's the key thing with this. A divergence is when there is a momentum change in the markets, that we are having a higher high in this case, but the momentum is not reflective of that. Okay, and actually the divergence is right here, I guess. So we will change that accordingly. And so with this one, we actually had a pump up, and then we actually broke down from that. So another one is more recent, which is what I wanted to talk about right now, is that we have a divergence here. We had a higher high here, and then we also had a lower high on this zone. Now, this one hasn't broken down as much, and this is one reason why I actually do want to mention this, is because we also have a hidden bull div, and we had one right here. And so that one there with a higher high like so. And so what this does is it kind of cancels them out, so to speak, in some sense. And so what this does is it creates a range-bound move. When I talked about Bitcoin in the previous section, or the theme actually, I should say, like, you should view these as two things, either a trending market or a ranging market. And so this creates a ranging market here. And so now we can look at this from a range-bound perspective. That's the best way to just delete the divergences and focus on this. When you get a bearish div by itself, there's a certain invalidation point. So with this one, this would be the top of that divergence. This would be the second point. And so if it goes below that zone, which would be like right here, that's where you would break. If it goes below this box, that's where it would invalidate the divergence. It has not invalidated here. That's one reason why we haven't broken out yet. But now we also have a hidden bull div, and so that also complicates things. but we haven't broken that either. So now that becomes this range. And it actually is like this, but I extended it for simplicity. So once we get this range bound break, basically my point is all this is a range bound break. If we break above to this zone, above 30, basically 3,900, then we can move on to the top of this about 4,000 and plus. If not, we're going to come back down. We do have a bullish breaker that we need to probably retest. We don't have to. About 5% of the time they don't, but if we do, that's where we would go at 3,300. And so we'll see where that goes. But that's pretty much the deviation aspect in a nutshell. I'm not giving this justice, I understand, but I want to give this a mention because they're so strong. A lot of people just don't even pay attention to them, and they're all over the place. They're obvious areas of interest. This one in particular is also a little bit low, but some of these are up top at the higher zones, and that's another. That's a key. That's an extremely key aspect to the market. Like here was one, here was a divergence, but that was on the low side. Trying to look for one on the top side. Here was one, and that kind of gave us a complication there. And so here was another one that was at the highs. And so a lot of times the divergences don't always work, but when they work at the highs, they work very efficiently. And so just kind of giving you some ideas with that. And so if I really wanted to be comprehensive, this would take a whole week to discuss. But I wanted to mention these because divergences are simple. They're simple patterns to identify, and they can help you give a context to the market. So now, as far as the analysis portion, you can take a look to the weekly. And so let's go to that. We had another small bearish week from last week. We had a bearish cross also in regards to that. So this is kind of what I was wanting Bitcoin to do. Hasn't done it yet, but Ethereum has. We have a lot of ETF discussion. Don't give a crap about the ETF situation because it hasn't affected the markets. In fact, it's in some ways it's made it worse because we had that impulse that was a little bit unnecessary. And then we also had the bearish cross on top of that. Now, the bearish cross happened at 27%, so it's not going to be super effective, maybe slightly so. But so far, this is actually setting up a good thing because this reset the trend on the weekly. And so if we get a bullish trend back on ARN for Ethereum, now I'm much more interested in. I am not interested in Ethereum right now. It had up until about an hour ago, it was the least performing coin, and maybe that will change. We'll see where this goes, but if it goes back above the zone, it will flip, and then it'll be good. And that's where I'm focused on the trends for the weekly because we probably won't get a chance to flip bullish again on the weekly for any of these coins. This might be the last chance for the rest of the market cycle. And so that's pretty much Aaron. It is getting into a bullish consolidation, so that is worth mentioning that we could get kind of a consolidation, like a slow pressure move, then that impulse. RSI is just kind of floating around, nothing in particular. Now with the daily, we have this resistance zone. That's mainly what I'm looking at. Haven't gotten even close to that. We have our range bound that we know about, and so this is going to be a little complicated because if we break above this zone, we still have this resistance structure, so it's not necessarily going to give us anything at all. We also have this here, so this range is within two support and resistance areas, so it's a little bit complex here. So that's what you got to work with. We also have an ARN wedge that could lead to a downward pressure, and Ethereum hasn't really performed as well as the other coins. So we'll see where that goes. RSI is just not doing too much in particular for me at this time, but really, the daily for Ethereum is just this range breakout. Need to break above that zone, get to that 3,900, take this one level at a time. I'm not overly interested until we break above 4,000 because, like I said, that would make this bullish on the ARN, and then I can long that. I would rather not take a chance at 3,900 and wait until 4,000 because $3,900 is still resistance to me. According to ARN, it's still resistance. So I'd rather wait another extra $100, get that confirmation, and go from there. So anyway, that's Ethereum. Let's go to Solana. All right, on to Solana. I'm going to cover the daily very briefly because the theme it pertains to the daily, and we're going to talk about fake outs here. And so fake outs and deviations actually are roughly the same thing. I didn't talk about deviations as part of the theme, but that is the same thing when we're working with that. So I actually have two examples here. So the fake out for this one is really just like so, and this is, it's one of those like blink if you miss it type situations, and this is where we actually broke below the zone. The problem is this is very close, so you could consider this one way or the other. If you try to do the line chart, we can kind of see that it did break down, so that's one reason we can look at that from that standpoint. But this broke down and it actually broke back above, so this is a fake out position, right? So why why is this important, even though it's just a small little thing? The reason why is because that showed us that, hey, we were supposed to break down. It showed us that we have more strength than we originally thought. And this is basically a trend line version of a deviation. And so fake outs are basically saying, hey, this is much stronger than a lot of people were leading to believe. You should take advantage of this. And so that's the point of this zone. And so another example would be from this area right here, actually. And so, I mean, we could draw this different ways. I think I'll draw this from here just for simplicity's sake, using this as a fulcrum. But we have the retest point drop down. This was supposed to come back down. Actually retested near this zone, but then it faked out. It did a fake out. This is a deviation. And so as you can see, this is the low of this entire area, up until this point at least. And so that there's a reason for that, is because these are strong. They're telling you that, hey, this point, this demand zone, this trend line area, whatever it may have been, this is much more stronger than I think you realize. You need to pay attention to it. That's the point of fake outs and deviations. And so we had that point right here. So again, I know this is a very, minor thing. It looks like it may not have touched depending on where your position is on the market, but this is a pretty big deal from where, based off of my experience in positioning. So that I think is valid. And then on top of that, you also kind of have this breakout anyway. So you kind of have like this dual analysis, right? And so from here, you can take a look at this, put your entry somewhere here, your stop below that deviation area, target the highs. You got 3.13. I think that's pretty decent. Now, let's erase all of this because that's just the theme. Let's go to the analysis part of this. And like I said, I won't do extra coins. I gotta run actually, so we're gonna keep this a little short and sweet. We didn't have we had kind of had a mediocre candle, and this is one reason why I thought that we were going to get that sell off, is because the last 2 weeks have not been very impressive. But we had a pretty good fake out for the week. If this goes strong, then I think that we could leverage that. And so, if we break above this weekly, I think that that's even better. And so we still have a ways to go, but this is very key. We also had this divergence here. We had a higher high technically right here. We had a lower high here, and that's one reason we got the drop down. That's where your divergence plays into that, right? And so we'll see. And you can also see this as a consolidation, because this is basically your range move for now. And so you can view this as a non-trending move if you view this as a range. And so there's different ways to apply this. So right now, that's how that looks. I would even actually look at this from a fib block and say like we're right above the mid. So if we can break above the mid, if we can get 170 break on the weekly, I think that looks really good. Aaron in particular has a wedge, pardon me. And so very similar to Bitcoin as well. This is a little bit stronger here at 21%, but still has that chance to break down. This could break down completely like by the end of this week. There's nothing saying that it can't do that. Okay, just because I think the market could do well doesn't mean the market will do well, right? So you just got to keep that in mind overall. If we Same thing applies to Bitcoin and Ethereum. If this breaks above for the weekly, this can reflip back to the bull side, and then I'm interested to long, for a big high time frame perspective. And so that's pretty much it with Solana. Nothing in particular other than that. We're kind of stuck in kind of a dead zone. We need to get out of this zone. And it's been a little more persistent than it probably needs to be. Going back to the daily, we already looked at that fake out zone. Another thing that we can look at here is we can look at this trend move. And so this is kind of, one thing that we can look at from here. You can view this a few different ways. I think this might be the best way to look at it right here. Very clean. It doesn't always have to be exact because it does depend on the exchanges as well. And so you can kind of straighten this down here and get some sort of trend line with that too. But the point is, if we can break this trend line, then I think that we are well on our way to 200 and 210. But we'll see where that goes. AREN in particular has a minor bear cross that has a small consolidation. That means that we are building up some demand because the bulls are on the bottom here. So that means it's a demand structure. So that tells us that the bulls are reloading here and ready to go. So we'll see how this works out. Got the bounce at the 50. Other than that, not much for the past couple days with that. So anyway, that's going to be Solana, pretty short and sweet. With that, let's go on to a summary. So a few things I mentioned for this video. I mentioned the theme of this video, the simplicity of analysis, talking about how things should be more simple versus complicated. Don't make things complicated on purpose. Try to make things, even if you find something correct, like let's say you find something high intelligent, right? That's good. How can you make that more simple? I did that with AREN by creating scripts. So that's one reason why I have my Apex scripts out there. They are purchasable, and it's a way to simplify my analysis so I don't have to stare at the charts all the time, right? And so with that, we talked about the themes of this video for Bitcoin. We talked about consolidations, and this is the current consolidation that we're at with the potential breakout that I just erased on there, looking pretty solid. With Ethereum, we talked about divergences. We have one here with a hidden bull div as well. Kind of waiting for that range breakout as a reasoning for that. And then we talked about fake outs, deviations for Solana, and how this was a recent fake out. This was a fake out as well. Deviations and fake outs are very similar to each other, and they need to be acted accordingly. So anyway, that's the video. Let me know what you think, and next week we'll go back to Monday videos. Happy to chat more. Feel free to DM me in Discord, and I'll see you next time. Thank you.